What's up, guys? So I want to talk about this topic that everyone keeps talking about, which is the Bitcoin price and the idea of having a paper Bitcoin and the suppression of the Bitcoin price by famous or popular exchanges such as Coinbase and whatnot. Now, let's start with the basics. Let's start with the idea. If you go on Twitter nowadays and let's say BlackRock or MicroStrategy or Meta Planet or all these big institutions made a big buy in Bitcoin, and you will see a lot of people talking about, oh, look, MicroStrategy bought 1,000 coins, and there's an inflow of ETFs of around $1 billion on one day, and the Bitcoin price has not moved. Why is that? Is the Bitcoin price being suppressed? Is Coinbase selling paper Bitcoin? Is this, is that? Why is the Bitcoin price not doing much? Why is the Bitcoin price dumping after a huge buy or not moving at all? Let's talk about all these things one by one. Now, first, and this is the most important thing you should keep in mind, and probably the most important factor when it comes to this subject, is that the Bitcoin price is actually going up. The Bitcoin price was less than $20,000 just in 2023 or in late 2022. Like in late 2022, it was as little as $15,000 when FTX crashed back in like November or October, something like that, of 2022. The Bitcoin price was literally $15,000 and today reached an all-time high of $112,000. So that's almost like a 10x increase in price in the matter of like 2 years or so, like 2.5 years. So yes, the Bitcoin price is going up. And if we see all these institutions and all these ETFs buying Bitcoin, they're buying Bitcoin and the price is reflected in that. There's more demand for Bitcoin than there was back in 2022. And we're seeing it in the price. Like when the ETFs were approved, I can show you the chart here, you can see it, and there's like a circle on when the ETFs were approved. The Bitcoin price basically went up because all this new demand for Bitcoin was unlocked and all these new institutional buyers and high net worth individuals and all these people who invest in ETFs, they bought Bitcoin. So the Bitcoin price really did go up. So the first point, yes, more demand is coming for Bitcoin, and the Bitcoin price is reflecting that. Now, it doesn't have to be instantly when Saylor buys 1,000 coins, you should see the price shooting up. That's not how it works, and the Bitcoin market is big enough to absorb all this liquidity without huge changes in the price. Still, Bitcoin is a very volatile asset because it's not a big asset still, and it's an open 24/7 market that is open for any type of liquidity, anytime, any day. And so the Bitcoin price could still be, very volatile, but, to say that the Bitcoin price should just shoot up the second anyone makes any purchase, that's not really realistic, and that's not how any market actually works. It will reflect with time, it will be reflected in the price. Now, the second point I want to make is that even if MicroStrategy, BlackRock, and all these big players make any Bitcoin purchase, you should understand and you should keep in mind that every time there's a buyer, there's a seller. So none of these purchases that BlackRock and MicroStrategy are doing in a vacuum. They don't exist on their own. They are being made because someone else decided to sell. And the way we reach a certain price, it's also not in a vacuum. It's also not coming from God or supernatural force or the gods of the algorithms. The way a price is set, whether it is in Bitcoin or any commodity or any market or any product or service, is that when you have a buyer and you have a seller, let's say I want to buy Bitcoin and you want to sell it to me, I want to buy it for $1, and you agree to sell it to me for $1, that means the Bitcoin price at the time of the purchase is $1. Now, the Bitcoin price could change if someone else comes in after me, or even if I did that, if I came in after that purchase, and I purchase another Bitcoin for a price of $1.5. So let's say the seller this time agrees to sell it to me for $1.5, and I agree to buy it for $1.5. If I don't agree to do that and we don't do any purchase or sale, the price remains the same. But let's say I agree on that, and I make the purchase and he sells it for me for $1.5. Now the new Bitcoin price is $1.5. And the other way around, if let's say I was able to get a deal for $0.5 and the seller agrees on that deal, then the Bitcoin price would be $0.5. So really, when you go on Coinbase or on Binance or any of these exchanges, or just go on Google and search the Bitcoin price, and you see like the price is changing almost instantly every second, this is just the algorithm calculating all these bits that are being made on Bitcoin and coming up with the most or the best estimate of the Bitcoin price. So that's why every second the Bitcoin price changes, because every second there's new demand, there's new sellers, there's new buyers agreeing on this Bitcoin price. So it's not Coinbase who sets the price. It's not Binance who sets the price. It's not a supernatural force who sets the price. It's you. It's people like me and you willing to buy and sell Bitcoin. It's the people on the market bidding for Bitcoin. They set the price of Bitcoin. So when you see MicroStrategy, let's say, buying 1,000 coins and the price doesn't move, it's because they bought those 1,000 coins at the price they agreed on when they bought it. Like the price was $100,000, they bought it for $100,000. It's not supposed to move the price. That's what happens. And even sometimes it's like the opposite effect, because MicroStrategy already made their bid and announced the Bitcoin price. They already bought the Bitcoin for $100,000. The price could go down to $99,000 or $98,000 because the market understands that a big player such as MicroStrategy already made their bid and they agreed on this price, so there's less bidders now for the next few days until they start buying again. That's why the Bitcoin price drops. So if you're a big player trying to get into Bitcoin with huge amounts of liquidity, you will be kind of taken advantage of, because, under quotation, because it's not really taking advantage of anyone. It's just two people agreeing on a price. But usually if you have big liquidity in US dollars, let's say, and you want to buy Bitcoin, you're going to buy it from a guy who has big liquidity in Bitcoin. So because you're the one demanding the Bitcoin, and Bitcoin is not a very highly liquid asset, they get to have the upper hand and charge you a higher price. And after your purchase is done, the price could drop. You're not gonna make profit on that purchase just instantly. This is the risk that many big billionaires and big institutions have against Bitcoin, is that they cannot really enter the market without moving it up to the upside too much, and bearing all this increase in price, and then for it to drop again after they're done bidding. So this is why these big institutions and these big billionaires, they're a bit scared of getting into Bitcoin. But right now it's getting easier because the Bitcoin market is like a 2 trillion market cap value. So they feel it's more safe now, it's more liquid, it's more saleable to be able to get into the market without moving it a bit too much. So what I'm trying to say in the second point is that the Bitcoin price simply is decided by us, by people who trade Bitcoin on a day-to-day basis. That's really it. It's not a mystery. It's not something that anyone is suppressing in that sense. But this is the third point I want to talk about, and how the Bitcoin price could be suppressed is the idea that exchanges could be selling paper Bitcoin. Now, there's this theory that keeps floating around, and it's not only a theory, it was a reality at some point in the Bitcoin market, is that exchanges could be selling paper Bitcoin. So remember FTX, we talked about them earlier. When they collapsed because they were selling Bitcoin, or they were selling other cryptocurrencies that don't actually exist. And when an exchange does that, one of the main features of Bitcoin that allows it to go up in price and be the asset, the store of value that we all count on, is the fact that it's scarce. It's a rare asset. It has only 21 million Bitcoin. Right now we have only 19 point something million Bitcoin in circulation. So when an exchange such as Coinbase tries to sell you Bitcoin that they don't have, what they're doing essentially is that they're increasing the Bitcoin supply beyond 19 million, beyond 21 million. And by doing so, they're selling Bitcoin that doesn't exist, and thus they are suppressing the price. So the demand that is coming into Bitcoin is not being poured into actual Bitcoin, it's being poured into a supply that is being created out of thin air, kind of like how fiat currency gets created out of thin air. And because fiat currency gets created out of thin air, no matter how much demand there is for this currency, it will always either stay stable or lose value if the demand does not keep up with the supply. If we're doing the same with Bitcoin when it comes to Coinbase and other exchanges, that could indeed suppress the price, and that could, be alarming for the Bitcoin market. However, and just to counter these theory, I think that, exchanges such as Coinbase and other exchanges on the market, Binance, Kraken, and whatnot, I don't believe they have the incentive to sell you paper Bitcoin, because these companies, they are in the business of selling you Bitcoin, and they're not incentivized to suppress the price. Now, we know FTX did that for whatever other reasons, but when it comes to exchanges, they don't want to suppress the price. They want you to buy Bitcoin, they want the price to go up, and when the price goes up, it brings all this euphoric bull run and this retail FOMO into Bitcoin, and that's really beneficial for an exchange because they get more customers, they get more trades happening on their platform. They're mainly in the business of selling you Bitcoin and cryptocurrencies. And so when the prices of these things go up, this brings retail interest, brings institutional interest to these assets. And of course, these people are just going to come in, use their platforms, pay the fees, sign up to their platforms, use their products, whatever they are, the leveraged products and the staking products and everything like that. And they're just going to earn way more fees. So really, these exchanges, they wait for days like these. They wait for the bull market to basically 10x their revenue, even more. They make huge revenue during these times when the Bitcoin price goes up. So it's really not logical for an entity such as Coinbase to sell you paper Bitcoin when it could actually sell you real Bitcoin for higher prices, because higher prices entail higher fees. That's one. And higher prices also entail higher customer count. So they get more customers, they get more trades, and all of that. So that's the number one thing that you should think about, is that exchanges and Bitcoin companies are not incentivized to sell you paper Bitcoin. They are incentivized to, see the Bitcoin price goes up. And to add to that, most of these companies also own Bitcoin, they also own other cryptocurrencies, and they want to see them doing well. So why would they suppress the price? I don't see this as a compelling argument. I don't see the compelling argument for that. Now, the second point you should think about is that, the idea of paper Bitcoin and, the whole idea of fractional reserve banking, where you issue more money than what actually exists in the bank or the exchange in this scenario, or this practice can only be done in the context of fiat currency. It can only be feasible in that context. So the reason, banks perform fractional reserve banking is because they're in the business of lending money. And the business of lending money is the business of earning interest on lending money. So the way the banks make most of their revenue is by issuing loans. And when they issue loans, they get interest revenue on those loans. So let's say I deposit $100 at the bank. If they only have $100 that they can, loan out to other clients, then their revenue is going to be so much lower. It's going to be so much harder for them to loan these people. It's going to be so much harder for them to attract more people to, take out loans. So what they do is they are able to, lend out $900 from the $100 that I deposited if they're running a 10% fractional reserve bank. So they do that. Instead of only lending $100, they can lend $900 and they can 9x their revenue on that. And the only reason they are able to do that is because if I go back to the bank and go ask them for my $100, which they no longer have, they have the support of the Federal Reserve, who will come in and say, don't worry, we will give you this $100, and they can just issue that. They can just print money, basically. This is where printing money comes from, is when they issue $900 from $100, so they issued $800 more than they actually have. And so this is how they create money out of thin air. Now, when it comes to exchanges, there's two things to keep in mind. First, they're not really in the business of lending money. They do lend money in the sense that you deposit, in the sense that they try to hypothecate Bitcoin in some ways, but really the majority of their business is earning fees on trades. You go in, buy Bitcoin on Coinbase, and you go out. That's it. They don't have a lot of sophisticated lending options, and it's not the big bulk of their revenue. So they're in the business of doing that. And the second thing to keep in mind is that Coinbase and other companies such as Coinbase, they don't have a lender of last resort such as the Federal Reserve. So if Coinbase decides to do fractional reserve banking and issue paper Bitcoin, and then all these people who want to come in and take out their Bitcoin, and then Coinbase is unable to do that, Coinbase is going to go bankrupt. This is what happened with FTX. This is what happened with MTGOX. So there's not a lending of last resort when it comes to Bitcoin. And this is one of the very good features of Bitcoin, because it's the main key feature is because you can use Bitcoin as a bearer asset. So me as a user of Bitcoin, I can actually go to Coinbase and withdraw these Bitcoin. I don't need a bank. I don't need a bank to hold it for me. I can go and withdraw it. And this is a very important thing. And this is why we keep telling Bitcoiners to withdraw from the exchanges and do self-custody. Because in doing so, you're not only, saving or keeping your Bitcoin secure, but you're also helping the market, avoid the fate of paper Bitcoin. And you're just keeping all these exchanges in check. When you go there and tell them, please give me my Bitcoin. And if most of their customers do that, they're never in the position of trying to rehypothecate or issue paper Bitcoin. They're unable to do that. And any exchange such as MTGOX and FTX who attempted to do that, in very short notice, they went bankrupt and they shut down, and they don't have any lender of last resort to basically, save them from, you bail them out from this pickle. So this is the point that you have to keep in mind. Bitcoin is a better asset. Exchanges are unable to rehypothecate it or issue paper Bitcoin without going fully bankrupt. So what do we learn from all this? What we learned from this is that the market will do what it wants to do. No one controls it. Sometimes it gets manipulated for a short period of time, but overall, a market is a market. It's decided by me and you as buyers and sellers. The Bitcoin price did actually go up in response to all this institutional demand, and you should withdraw your Bitcoin from the exchanges to avoid the fate of paper Bitcoin. And you have to use Bitcoin the way it's intended to be used, and this way we can have the market for Bitcoin that we all want it to be fair, and only 21 million Bitcoins being traded. So that's it for this video. If you have any questions, please leave them down below. Let me know what you think of this market, what you think of this price. If you like this video, leave a like, subscribe, share it with friends, and I'll see you in the next one. Goodbye.